After some pretty decent economic macro data, the market has been on a bit of a rally. But can this be sustained, or is it a little bit of a dead cat bounce? Let's talk about it with Riz. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap. Today, we've got the man himself with us. Riz is back on webinar. How are you doing tonight?
Doing good, Chris. Yourself?
I am doing great. It's great to have you back. And it has been quite a bit of change of pace in the market. Obviously, we've been in a downtrend for quite some time, since basically the beginning of 2022, for lack of a better term. And we have been in a very solid downtrend, but it looks like we might have been able to break out of that. As many times as my line has been respected, now it seems as though we've broken out and resistance has become support, which we do see sometimes happening with these critical levels. And with some decent economic data, we had a bit of a rally here coming into the end of the week, also supported by some pretty decent earnings. Now, I think the big question on everybody's mind is can this be sustained, or is this just a little bit of a rise before the fall?
Yeah, so you're absolutely right. This is definitely something on everyone's mind, including mine. Um, the first thing when this rally occurred last week, or continuation of this rally, the first thing I thought was, well, there goes that trend line that Chris has had for over a year now, and it's been working and running beautifully. In fact, I've seen this exact trend line, Chris, online on other people's platforms, but honestly,
Obviously, that they stole it from me. It's
yeah,
clear that they
honestly,
stole it from me.
exactly. Honest to God, I think you've had this exact teal blue line. I think first, honest to God, not even BSing here. Like I remember having, like, you literally had this for such a long time, and I just
Oh, yeah.
started seeing it now. So I'm like, wow, okay, everyone kind of just caught on, or they saw our video or something. But I was like, okay, that's pretty neat. Nonetheless, uh, it's something that's interesting. I feel like the fact that it's broken out right now, it's awesome for everyone that's long, but not so awesome for anyone that was short, or sitting on the sidelines. Now, I'll be the first to say, I'm about 85, 90% cash, but that doesn't mean I haven't been doing anything. Had a good run in this month. I'll be honest, to be very transparent, it's about nearly, as of today, as of Friday, I should say, about maybe 80, 90K realized capital gains, just this month. Again, because I've been trading uh, a little bit differently, but that's fine. Ultimately, you have to do what you can with the market that you have. So to answer your question, can this continue? Yes, unfortunately, this can continue for those of us that are in cash or waiting for a drop. Um, but here is a caveat. Next week, coming up, we have uh, the Fed rate decision, right? So I can tell you in Canada, we had a 0.25% rate hike, 25 basis point rate hike on Wednesday. That brings Canada's benchmark rates up to about 4.5%. It's expected as well that they will pause. So why am I bringing up Canada? Uh, well, because this also gives us an indication as to what another central bank is doing, in North America, as opposed to the U.S. So, in fact, Canada was the first uh, country to actually raise rates at the start of last year, and of course, U.S. followed. So, I'm not saying the U.S. Federal Reserve or Jerome Powell is going to be look into Canada what we do, but it at least gives us a look into the minds of some other central bankers, and I feel like what's going to happen in this rate hike, I do think we're going to get a 25 basis point rate hike, and then I think the Fed's going to say something about pausing. The kind of, I would say, whirlwind here is that because the markets have run up, because the economy, GDP numbers, everything is strong, stronger than anticipated. Does this mean the Fed is going to now keep that aggressive view on markets? Sorry, interest rates. It's something that I feel like. it's interesting. It's interesting to see, and I feel like we're gonna have to figure out what do we do once they give their remarks, and are they going to continue to raise rates? If they do, I think the market's going to pull back because the market is factoring in the Fed pivoting and holding, and at some point, sooner rather than later, you know, dropping rates. But I don't see that happening. A stronger economy is good, but it's also negative from a rate standpoint, where I think the rates could perhaps go higher. So we're in very much kind of like a walk the plank situation, where you're we're waiting to see if we jump down and there's sharks, or if we're jump down and we're in clear waters.
It's a great analogy. Obviously, there's quite a fine line that we're walking right now, and it's not just the support line. As far as rate hikes are concerned, and market sentiment. And so, you mentioned we got a big week for earnings. We'll talk about that here in a minute, but let's take a look at the overall picture for the market right now. This is the last year. I could put it on year to date, but we only have a few data points, and so it'll be kind of hard to really kind of get any data out of that. So I want to see where we've been in the last 365 days or 200 trading days approximately. And energy is really just continuing to ramp up here. We had this dip coming into December last year, and we've been on a very nice melt upward trajectory so far. Healthcare and utilities are currently above the zero line, for the year, and everything else is still below. But we can see here the SPY ETF, at least representing the S&P 500, really starting to move towards the upside, and we're bringing some of these beat down securities with it. We've got healthcare, real estate, consumer discretionary, communications, all starting to pull up and get a little bit closer back towards competing with the overall market. Financials are also pulling up, while consumer staples are holding pretty steady so far. Obviously, the market going up really is beneficial to these beat down, sectors right now. But I've noticed, and we'll look at oil in a second, but oil is not doing so much. What's going on with energy here? Why do we continue to see this push upwards?
Yeah, the energy sector. Yeah, oil is different. Energy sector. Uh, I think it's topped out a bit. We had um, some of the oil producers actually release earnings, and they had some record profits again. So I think the market's now realizing how much more can we squeeze out of this oil sector. We have seen oil prices actually trend up slightly um, over the last little while. Gas prices at the pump have also gone up a little bit. So there seems to be mumblings that perhaps we could see energy prices creep up a little bit again. Maybe not to the extent that we saw last year, leading into summer, but perhaps a little bit of a pickup. So I'll be monitoring that closely. But I think right now, I think the energy sector is pretty much topped out. I would not be going out and buying um, energy, oil producers, all that kind of stuff, personally, in my opinion. But I'm not betting against them yet either.
Clearly, we've squeezed enough oil out of that rock, and we need to move on to a next one. But let's keep going here. Let's talk about those securities, or rather asset classes that we do enjoy talking about here. Oil is definitely starting to kind of pull up a little bit here, but really kind of stuck below, around 81.50 seems to be where 82 is kind of where we're topping out, and just kind of hanging out here right around 80. So a little bit of sideways action on oil, while gold continues to rally. Just a huge run up in gold here over the last 2 months or so. Really an impressive push, and approaching around this 1970 resistance area. Riz, what are you seeing with gold? This is it's insane. This is a nutty rally. What is fueling this?
Yeah, I'm keeping an eye on gold for a short. Nothing yet. I actually was looking at it earlier this week, but I held off. This sort of slight pullback from the peak from earlier a couple weeks ago is good sign. Again, we don't want to just stand in front of a locomotive here and short once it's absolutely tearing away. But this is a good sign. So stay tuned for any lead. If I do take a short, it is something I'm watching. Not to worry. Oil, on the other hand, is also something I'm watching, but little less appealing to me because of this kind of consolidation zone, Chris, that you have drawn excellently, and it's been there for a long time, which is that 76 to 85 zone. So that's giving me a little bit room to pause. But if I had to wager, if I had to go one way or the other with oil, um, it's still an overall downtrend, but the fact that it found that 70 area floor to me was pretty bullish. So I'm waiting to see if we can kind of go right above that 80 area, and with a strong momentum, then I might go long oil via ETF. Um, Again, not buying oil producing companies, but the oil ETF. Okay, different oil ETF. So I'll share that in elite whatever trade I do at that point. But a couple ideas there as well. And of course, I will reiterate in regards to gold. Again, I wouldn't be shorting gold producers unless I see a really nice opportunity. But I would short the gold ETF. And there's different ones out there as well. So uh, stay tuned for that. Again, nothing yet. I know I mentioned a couple weeks ago I'd be potentially taking a trade, but as you know, I am not one to be hasty in any trade. And yeah, that's kind of the sort of the principle I apply, and I think I'm pretty good at that. Hopefully, everyone agrees. But yeah, I never just dive headlong into a trade. So if that means I end up waiting a couple weeks or a month or even more longer than I anticipated, that's fine.
And I think that's important, especially when you're looking at to take something towards the downside on the short. I mean, if you'd have jumped in here, you would have gotten destroyed with this rally. And sometimes taking a little extra time to make sure that the move is confirmed is incredibly important, especially in this market with how bouncy we've been. And we often refer to it as a kangaroo market in chat for those of you who are part of Elite. So it has been a little tricky, and I think it behooves you to be a little more patient to make sure that you get the entry that you want and don't overtrade. I think overtrading right now is a real good way to lose money. And Riz definitely shows us how to be patient and what that means. And I think that's really important. That's an important skill to learn as a trader. Let's take a look here at the bond yields and the dollar. Bond yields seem to be in a bit of a downtrend in general. I mean, we seem to just be kind of slowly melting towards the downside. Riz, is this because the economy is going so well? Is that kind of what's pushing these bond yields lower, or are we seeing something else at work here?
Yeah, good question. So we see an inverse correlation, not always, but sometimes, and that's applying right now. We've seen a little bit of a trickle down from bond yields, and as a result, we've actually seen a little bit of a pullback in uh, mortgage rates as well. So remember when we first kind of introduced these indicators, these macro indicators this year, or I should say last year, end of last year, we mentioned that the bond yield for the 2, 5, and 10 year, uh, sorry, 2, 10, and 30 year are key ones, and the 2 and 10 year are the ones that really are the most important, kind of dictate current and near future interest rates and for different financial products, whether that's line of credit, credit cards, mortgages. So because we've seen this little bit of a pullback in all of them, but especially the 10 year and the 30 year is also lower as well. But because of these decrease in bond yields, we're seeing other rates drop slightly, not significantly, still very much higher than a year ago. But this is pulling back the bond markets, kind of feeling a little bit more, let's say, bullish on the market. That's one of the reasons happening. And they're also potentially signaling that the Fed might pause. Of course, we will find that out a little bit more clarity this coming week because we've seen bond markets and yield pull back a little bit only to kind of just pick back up. I don't think we're going to see like bond yields come back to around 5% or something. We're already in what's known as the highest interest rate environment in the last, since 2007, 2008. Okay, so we haven't been in an interest rate environment currently that, like we are in now for at least, what, nearly 15 years. So it's interesting. It's very interesting. I don't think we're going to see like 5% yields on these anytime soon. But let's see.
Good to know. Obviously, keeping an eye on the macros is really important, especially if you want to get an idea on where we're headed. And right now, the dollar is headed down. And, we've talked about this at length that this is something that needed to happen. It's not necessarily a bad thing. We are starting to see a bit of a weakening of the dollar, which is, can be beneficial in several circumstances. Is there anything different you want to add to that, Riz, or are we looking okay here?
Yeah, looking okay. Relatively weakening to major currencies, and like you said, not a bad thing per se. We just wanted to now hold this. If this keeps going lower, then I think that turns into a negative thing. But very much so, if it kind of hangs around here, that'd be pretty suitable.
All right, cool. Now let's talk about one of our newer sections of the course, which is the key dates that are coming up in the market this week. And Riz already alluded to one. The big one is the first on Wednesday at 2 p.m., the Fed interest rate decision. And this is going to be one, I think, in my opinion, at least in the last couple rate hikes that we've had, the market has just kind of been in a hold and wait pattern. But the other thing we got to remember is we're in earnings season, and we'll talk about that in a minute. But obviously, we're looking here. The forecast is another 25 basis points, and then the question is, will the Fed hold? So that's a good one. Of course, we've got unemployment rates for January coming out on Friday. That's another big, catalyst to keep an eye on. I think those are most of the big ones. Non-manufacturing PMI is always important to keep an eye on as well. But anything else you want to add to this one, Riz?
Yeah, nothing else. I think this looks good. Job openings are there, and like you said, the PMI is there as well. But the two key ones, I agree, Chris. I'll be looking at paying attention, obviously, as February 2 p.m. Eastern, and of course, early morning unemployment on Friday 8:30 a.m. Okay, so both are you can see the previous metrics and expectations forecast. Okay, so that's important to keep an eye on. So we'll see how that goes.
Definitely something to keep an eye on this week because these will move the market. This is something you got to be aware of, especially if you're taking things to the long side with this bounce lately. That this rate hike on Wednesday could make the market turn around if people view it as a bad thing. All right, now we had talked about discussing earnings, and actually we got a question from one of our members about earnings, but since Riz was going to talk about it, I don't feel I need to read the full question. We've got a big week of earnings going on here. Riz, man, this is quite the list. What are you keeping an eye on?
Yeah, this is a very significant earnings week. Obviously, the main ones I can tell you I'll be keeping an eye on is ExxonMobil is there. Like I said, I'm not going out there and buying, but it will be interesting to see what their numbers are. I project they'll probably have a fantastic quarter. We've seen that similarly coming out with Chevron and other U.S. oil producers. So I don't think Exxon's going to be any different. They're going to have a tremendous quarter again. UPS is another. Pfizer, okay, whatever. But McDonald's is something that's going to be interesting. Caterpillar is one as well. Just get an idea how that sort of industrial sector is doing. Spotify for a growth play. Phillips 66 is also another one, along with Marathon for smaller oil producers. Followed by after the close on Tuesday, I'm going to be interested in AMD. AMD is something that is pretty much watched by pretty much everyone in Elite, so that's going to be interesting. Snap, I don't really care too much about it, but it'll give us an indication of how the social media area is doing, and I'm sure that's going to have an impact on Facebook and whatnot. We've seen that happen before, where what happens with Snap, it's actually either done, either a positive or negative sympathy play into other online companies like Facebook, even Google, and whatnot, or I should say Meta specifically. Electronic arts, gaming, not too thrilled about that. I don't see much going on there. And then Peloton, actually, I mean, not a good company fundamentally, but it'll be interesting to see what that's dumpster fire is doing lately. Meta on Wednesday after close, again, Facebook, very much interesting. To see. And when it comes to Thursday, Eli Lilly, one of my favorite companies, on a massive tear, has done really well this year. Sorry, the last 1 year. I don't have a position, nor do I plan on taking one, but it'll be interesting to see how they do. Uh, and then, of course, the heavyweights on Thursday after close. So one day after the FOMC rate decision. So goes without saying, Amazon, Apple, Alphabet, aka Google, those three, without a doubt, are going to be the biggest ones on watch for me this week. Um, Ford, again, if you really like automotive sector, Qualcomm for some chipsets, and then Starbucks as well. Apart from that, that's it. These Thursday is arguably the biggest one, but we got some important stuff happening Tuesday and Wednesday as well. So a very busy, packed week, and who knows, maybe you like something else, and maybe you're watching it, and that's fair, that's fine. Be aware what you hold, and what's reporting. If you hold, I don't know, like if you hold, Merck or Hershey or Sony stock, and you want to know when they're reporting, which is in this case Thursday before open, and you want to be aware of that and position accordingly, or at the very least, not do anything, but just know, okay, this is a catalyst, right? So I find it's for new traders, it can be pretty overwhelming because maybe they hold something and they're like, oh my God, I just completely got caught off guard, and why is the stock up or down so much? Well, first thing you always want to check is there any catalysts, any news, and of course, earnings is one of those big catalysts to be aware of.
And I think that's an important thing to talk about, especially when you're a newer trader. It can be hard to hold through some of those drawdowns, especially on earnings if you don't close. So if that's something, and if you're green on a position and you want to make sure you lock that in, might be a good idea to close before earnings just to make sure that you avoid any potential downside. Now, of course, you may miss some upside with that, but no one ever lost money by taking profits. Somebody smart told me that. I don't remember who he was, but it's definitely a big list to keep an eye on. And let me pull up our members' question here real quick so that I can read it for you. And for everybody who's here in chat, please feel free to start posting your questions. This comes from Jeff. I said he couldn't make the webinar tonight, but he did the right thing. He PM'd me his question. He wanted to know how Riz is planning on looking at earnings this week. I think pretty much a wait and see mentality is kind of where we're at. And we talked about the market rally last week. However, he also wanted us to take a look at AMT off a possible long on a weekly support around 220. Let's take a look at AMT.
Yep, this is a solid stock. This is a great long-term hold type of stock. It's more of a REIT, as you can see in the top left corner. Has good dividend yield. I don't have it off the top of my head, but it's a solid company. Definitely can't go wrong holding this. Ideal, obviously, in hindsight, would have been around the 210 area, but even now, not too bad. Earnings are not till another month or so. So I think you have my blessing if you want to buy this, especially more so for maybe a longer term swing trade position. Just be aware of the catalyst coming up. We don't know, but if Jerome Powell decides to nuke the market, I would welcome it personally. I know not everyone will be happy, but I would personally welcome it. But if he does, guess what's going to happen to AMT or any other stock? They're gonna want it too. So be aware of that when it's a catalyst. Okay, and any other future major market moves will define most of these stocks. Now, because AMT is a REIT, it's low beta, lower volatility, so it can relatively hold up well. But generally speaking, we do see most stocks drops if we see markets pull back.
Yeah, that's a pretty common thing to happen, especially if a big market moves happen. Usually, it'll pull a lot of stuff down, and that will be a bigger catalyst than most anything that happens. Though earnings can counteract that a little bit if they report on that day. We got two questions here: PayPal and Amazon, two of our favorite ones to discuss. Obviously, PayPal has been in the dumpster fire here for quite some time. This one got wrecked. With all of the things going on with that, and really has not seen the recovery that we're hoping for. Though we do appear to be, approaching some resistance here at the 200 and the 100-day moving average. I mean, man, PayPal is just destroyed. Riz, what are your thoughts on this one?
Yeah, very much a flop, so to speak, from a turnaround play from the thesis standpoint. For me, I don't have a position anymore. I did, for those of you that remember, over the last year. I feel like it's definitely viable for a technical trade, like a long position, uh, a first swing trade. Again, not a bag hold, not an investment. You make sure you have your stop set on this one. Um, and of course, we have earnings coming up next month on this as well. Very much contingent on what's going to happen with the market. But so far, it's looking good, like a nice trend upwards. Keep in mind, you can see that consolidation and that convergence of all those trend lines, moving averages. So very important to keep that in mind. There's quite a bit of importance around that because when we see a big convergence of these all three trend lines um, and a crucial, let's just say, support resistance area that's already drawn around the 81 area, this could have a big move. So from a technical standpoint, sure. From a fundamental standpoint, not the best. Not too thrilled with how things have worked out over the last year on this, and of course the broader economic and market pullback didn't help PayPal's cases, but it was already struggling since even before 2022. In regards to Amazon now, great company, not as great of a valuation standpoint from as compared to Microsoft, Apple, Google, but still a juggernaut, still one of the top tier companies, and looking very very strong on a technical standpoint. Jump from the 86, 82 area, and looking good. It's one of the stocks in my tiered buy list. It's a tier one stock. Again, I'm not going to give away too much. So you have to be an elite to really get an appreciation for what I mean by that. But keep an eye on the RSI, a little bit overbought, and just pretty much everything is overbought over the last week with the massive rally that we've had. So if you do enter this for a technical or swing trade, even now I would still put I would put a stop on this thing. Maybe if you enter, let's say at 102, 103, maybe put a stop around 100. And of course, as we alluded to recently, earnings coming up on Thursday after close. Okay, so that's a big catalyst. I personally avoid trying to play these kinds of things as such a coin toss. No one knows for sure, and if they do say like they know what's going to happen and what's going to happen with earnings and what's going to happen as a result of earnings in the stock price, they're just a liar. You have to accept that if you're going to speculate, that's fine, but accept that it's speculation and not some, you know, uh, being able to see the future type of thing. So that's my take on these two companies.
Yeah, that's a great point. You can speculate all you want, but no one really knows how it's going to behave at earnings time. People like to act like they do, but they simply don't. Now, Panos has a great question, and he says, "What's the plan if the rally continues after this rate hike decision?" I'll be impressed, honestly, if we have a green day on rate day, but I've seen weirder stuff happen, that's for sure. But yeah, I mean, it's a good point. Like, what happens if we do burst through 4,100? Is it time to consider taking long positions, or do we need to kind of wait for a pullback?
Yeah, I would at that point, if we see anything past 4,100 strongly and holding up there, then I'll concede and say, you know what, I'm going to take some long positions. It might not be the most ideal time, but you have to kind of go with the market. You have to not fight it. And I'm not going to fight it at that point. I'll take positions that I feel like, you know what, okay, maybe not the best entry, but even if the market does roll over a little bit, I'm okay carrying. I would not buy these crazy overbought crazy growth stocks with not much fundamentals behind them, because they will get slaughtered if the market pulls back. Whereas if you have things like Amazon, Microsoft, Google, they will go red too if the market pulls back. But at least they're not going to be dead weight. So that's my thinking for now. I continue to remain about 90% cash. Overall, solid, very solid month. I'm very happy with the month of January so far. Fingers crossed. January is usually a rougher month for me. Historically, every January I've gotten, uh, you know, fucked sideways. Whether it's last year, 2021, 2020, 2019, January is like one of those jinxed months for me from a trading standpoint. So the fact that so far, again, we still have 2, 3 days left. So, uh, fingers crossed, knock on wood. But so far, about an 80K uh, realized gain, not bad. I was hoping to make it 100, but I still got a day or two. So let's see how that shakes up. But other than that, I'll be looking to wait and see what happens post Fed decision to really make some moves.
Yeah, that'll definitely be something to keep an eye on, and how that data is received, how Powell talks about it, whether he's, whether we start talking about rate slowdowns or even a pause, that will be huge, I think, for the market if that's the case. I think people are going to be pretty elated if they hear that. So that could give you some idea on what direction it may go. But yeah, if he starts spouting off, a bunch of hawkish, dribble, for lack of a better term, then yeah, the market could kind of go down. That may not help things. So it's definitely something to keep an eye on. And that is the big catalyst this week that we all need to keep an eye on. All right, well, I'm not seeing any other questions. And, Riz, you already told us what you're looking at for earnings this week. As far as being cautious this week and, being careful with our trades, of course, we got the rate decision. And me personally, I'm not putting in any trades before we get to that rate hike decision. What are your thoughts this week? Is it best to just kind of wait for the rate decision and then start looking at positions and how the market reacts? Or are you looking to try and capitalize on some of these earnings plays?
Yeah, gonna be waiting and see. I know it's not the answer everyone wants, but I'm gonna see if I feel like I'm feeling bullish or bearish for a specific stock that releases, and I want to really speculate. Okay, like I said, it's fine. I'm gonna accept that, and I'm gonna maybe take a little bit of a speculative trade, maybe buy options to play that. But that's very far and few between. That's rare. That's not my go-to. It really comes down to what happens on the day before uh, the actual release is when I kind of decide, okay, am I bullish or bearish? And also, what's the undercurrent of the market? Is the market liking, kind of most of these earnings, which they've been a mixed bag. They haven't been horrible as as people have perceived uh, so far with companies that have released. It's not been that bad. It's been a mixed bag. So that's one of the things that given the market the ability to carry forward and move forward above because earnings haven't been that brutal. If earnings, so far were that bad and everyone was getting slaughtered, the market would react. But so far, it isn't too bad. So the market's thinking, well, okay, the consumer's still strong. Corporations are still meeting estimates. They're not completely destroying and cutting their guidance. They're not completely missing by significant amounts. So that means, uh, the consumer is still strong, right? So I feel like I'm going to have to take a very much a speculative approach this week if I do trade any of these earnings releases. And quickly, Josh also asked if I'm holding off on short puts this week. Uh, and that's a good question. I avoid doing short puts and the Raptor method during earnings time, earnings releases, simply obviously because we could see large moves. So yeah, it's fair to say I might hold off on some of the companies releasing, but other than that, it's fair game. If I see an opportunity, I will. It doesn't help that implied volatility is low because the VIX is also very low. Uh, it's not no surprise there because markets have been running. So take a look at the VIX, right? Completely decimated near 18. Uh, Now, usually if you see the VIX around this area, it's not a bad idea to hedge and have, go long volatility, go long the VIX or a VIX product. But I considered it, but I've held off because usually some of these VIX products don't, there's a lot of tracking issues. They don't really move as well. So I kind of held off. And I'm glad I did because the VIX decided to go lower uh, this entire week. So let's see how this, maybe, start of the week, maybe Monday I might consider something. But other than that, very much going to be taking a wait and see approach from a short put standpoint, along with a new trade standpoint, at least till Wednesday.
Guys, I have to admit that was somewhat of a loaded question because I knew how Riz was going to answer that, and I wanted you to hear it from him. Again, I know we've said it more than once, but it's really a time to be patient and be ready to go and not jump in too early. I know it's tempting to just go for it because the market's going up, right? But look, we have tested 4,100 two times in the last 2 months, basically, and we have rejected both times. Now that's not to say that it'll happen. But if it does, you're going to be happy that you didn't buy in here at the top and now you're holding the bag while the market rolls over again. So this is why we're talking about this, why it's so important to be patient and wait for confirmation that we actually have a a solid trend reversal, as opposed to just a little bit of a saunter above the trend line and then a return back below it. So just be careful is all we're suggesting, because now is a really tricky time period for the market, especially with everything that we've been going through here over the last year. So with that, guys, I want to thank everybody for coming out. Thank you for your amazing questions. And of course, if you haven't done so, make sure you click that like and subscribe button down there. If you made it this far, leave us a comment and let us know what you're looking at as far as earnings this week and what your plays are going to be. And we'll see you in the market on Monday.